where do we stand? We stand with a stock market, and by the way, here's the other thing. The Fed did mention, all right, that financial conditions remaining favorable, tight credit spreads, and a rising, near record levels for stocks, was a reason to believe that the uncertainties around inflation could suggest the risk is to the upside. And I have been saying also all year, and maybe at some point this becomes an epiphany. I don't think this ever is the kind of thought process that gets above ground where the retail average investor is going to think about it. But you could say, and I really do say, because the Fed has said with their nuance, that they really would prefer to wait to claim victory over inflation, that the nail in the coffin of inflation could be asset price disinflation, because this is the one place you haven't seen any disinflation for any practical purposes other than a base effect and some roll down in the year-over-year rate of change in some of the market, most of the market, but the headline market's still pumping out 20% plus gains and healthy as heck, right? Well, maybe that's what the Fed says. Hey, as long as that's the case, we don't really have to get easy. We can stay restrictive. However, this seems to be changing. And looking at the leader of the pack, you throw in what Biden did yesterday, and yes, for the benefit of the country, and yes, maybe a move that needs to be made. Just suspicious in the timing of this, when these stocks are kind of on the ropes here, and where you could really depress this market going into the inauguration. I hate to bring that up, but it just seems a little too timely. This is something that could have been done a year ago, all right? And maybe some of this wouldn't be so frothy, all right? Talking about where NVDA is. NVIDIA, 126.28 is huge. It's just huge. But maybe more huge right now is, first of all, downtrend, rollover, downtrend. I mean, this entire move to these highs not confirmed and left hanging out to dry now because you have a potential downside reversal for the week here. If you were to get below, I forget what that level is, 133. Oh, 130, here it is, 133.83. You get below last week's low and close there. This is a horrific mother of all outside, downside, key reversal weeks I've ever seen. The NASDAQ had one right before the little mini meltdown in 2023. Very similar. That's interesting to me. All right, apply it. Now, all these chip stocks kind of recovered in line with NVIDIA reaching a new high. But, of course, the failures here, too, and this is even more significant. Look at Advanced Micro. Got up to the 2-year moving average, retested the trend line, and pancakes to where it's almost at what would be a new weekly close-only low here with a negative double-digit rate of return over the last 52 weeks, and an oscillator that's been trending lower ever since this high was established. Hello, or should we say goodbye? In the case of Micron, huge upturn here this week, but failing. It's at the lower half of the range for this week already after gapping up and almost getting back towards the 110 level, right? But now you're back below the 52-week moving average. The 2 years in play, the oscillator's negative, the stochastic's negative, and you're below the 52-week moving average, which is trending lower. That's not really positive. Qualcomm is interesting because it really appeared like it held here where it needed to after breaking the neckline of this really funky but cool-looking head and shoulders. It's like an alien head, an elongated skull in the alien head and shoulders pattern. And you can see the 2-year moving average held, boom. The neckline held, boom. You got back above it, but you couldn't quite get above the previous weekly closing high there. The 52-week moving average accelerating low. The oscillator is accelerating lower. You get below 152.89. This alien could be kaput. Intel will close at a new literally a 12-year low on a weekly close-only basis if it closes here, where it is right now. All of this little push over the last 2 weeks given up very quickly. This was once the leader of the pack. You could say in many ways it is kind of maybe still the leader of some part of the pack. The underperforming didn't stay ahead of the curve pack. It's really negative. So in that context, the semiconductor index, again, we looked at this the other day, but still look at it again today. Look at this this reversal pattern. Friday's close below 247.60 will complete a major outside-downside reversal pattern off of real bearish momentum divergence and a rate of change for the semiconductor index that's negative on the year. Year over year, the semiconductor index is negative. This is the kind of thing that sets up a long liquidation sell-off, a profit-taking sell-off. You can see here the XLK, kind of the bigger picture in the infotech, I mean, here's your 200-day moving average. Here's your uptrend line. Here's your series of tops that has been completely unconfirmed. Some of the most ominous bearish divergence I've ever seen. You get below this 229.40, you'll take out the previous low, the trend line, and the 200-day moving average, and that would be a major medium-term technical breakdown that could lead to a longer-term breakdown if 222 goes. You also have 215.95 there. But this, look at this. I mean, this is almost at new highs. It's as high as it was here. We know what happened after that. All right. But look at the transactions to the downside. I mean, this is so vulnerable to what we saw with Amazon 2 years ago. A massive profit-taking, long liquidation that turns into something more, aka a recipe for turbulence. Turbulence. Especially you get below last week's low.